What's going on, guys? Today I want to talk about why you shouldn't day trade stocks. So this is a big trend that I've been seeing in the past, 2 to 3 years when it's been a crazy bull market, and people love to be sold the dream of fast and easy money. That is how I saw a lot of gurus pop up selling you $30,000 courses on how to day trade stocks. And it's appealing to the human psychology of wanting the biggest reward with the least amount of effort. People want to spend the least amount of effort to make a lot of money really fast. But unfortunately, true wealth is built in a very boring manner over a long period of time. That is why I like to invest in real estate. And you hear a lot of real estate investors say that real estate is a get rich slow scheme. So if you do it consistently over your entire lifespan, so for me, I'm 32 today. If I continue doing this until in my 70s to 80s, it's going to compound significantly when I'm in my later years. So that's what I mean by get rich slow. And that's not very appealing. People want instant gratification, right? That's the way social media is training our brains to want things instantly with minimal effort. That is why things like Amazon and Uber Eats is doing very well. It's very low effort to buy on Amazon and it comes to your house. Very low effort to get the product. So let's go back to talking about why you shouldn't day trade stocks. So the number one thing is it's speculative and gambling. You cannot predict the market since the market is very reactionary. Let me give you an example. So Elon Musk can literally send one tweet. He owns Twitter now, and it will tank the stocks. If he sends a bad tweet that no one likes or it's very extreme, and that's going to cause the stocks to tank. And that has nothing to do with how the company is doing. It's just purely reactionary and emotional. So because of that, to me, that's investing something like that. It's scary. Like at the end of the day, you cannot predict how a stock would do, or the stock's at a mercy of one person's tweet. So for me, I just do not like that. So that's why I consider it as speculative and gambling. Like, yes, if you do make money, great. You should just cash out, take that money, and go learn to invest something long term, like real estate, like what I do. And if you do make money, then you're going to pay short term capital gains tax. Because most likely when you day trade, you buy low, you sell high by trying to predict the market, which is unpredictable. And that's taxed at your ordinary income rate. Versus real estate, if you own it for over a year, you get long term capital gains tax. You can do a 1031 exchange, a reverse 1031 exchange. There's so many ways to just defer that capital gains tax. And lastly, why should you day trade stocks when there's a more passive alternative that can be automated? So what I personally like to do is I like to dollar cost average an index fund portfolio from Vanguard. It's super easy. I set this thing up in 2018 and I've even touched it in 4 to 5 years. And it's so passive. It takes zero mental energy for me at all. So what I do is I have a three index fund portfolio. The first one is the total US stock market at 60%. The second one is a total international stock market at 30%. And the third one is a total bond market at 10%. So this covers everything. I literally own every single stock in the US, every single stock internationally, and some bonds just to create a little more security or stability. So literally that covers every single thing. And I automate $1,000 a month into these three index funds every month. So I don't have to think about it. That's called paying yourself first. And the average return is 7% over a long time with dividends reinvested. So if you follow the rule of 72, then every 10 years, your money will double. So let's just say I have $100,000 in it. In 10 years, it'll be $200,000. In 20 years, it'll be $400,000. In 30 years, 800,000. 40 years, 1.6 million. In 50 years, it'll be 3.2 million. You see how powerful compound interest is? And the key is just to get started as soon as possible and have your money invested for as long as possible. So just due to that strategy, like why do you want to deal with all the ups and downs of the stock market, being at the mercy of emotional tweets and all that? So for me, it's just so much more passive and actually probably better in the long term to just invest an index fund portfolio using a dollar cost average strategy. So once again, I hope you found value from this video. Please like, comment, and subscribe, and tell me if you still like to day trade stocks or not. Hope to see you in the next one. Thank you.